The Fed's favorite inflation gauge, PCE, also known as the Personal Consumption Expenditures Price Index, that showed further signs of cooling in October. And core PCE, which excludes the volatile food and energy categories, grew 3.5%. That's down from 3.7% from the month prior, and in line with what economists surveyed by Bloomberg had expected. We're still a ways away from the Fed's 2% target, but it's certainly a welcome sign that inflation is coming down here. And there you're taking a look at some of the actuals versus the estimates that came in here. And I think what the Fed is looking for continuously, even more so than that 2% target, is some of the stickier areas of inflation, particularly some of those higher costs. And you typically look at some of the other prints that we've gotten most recently, where shelter continues to be one of the largest contributors to that. But I think that's where the Fed is going to be looking for any cracks in inflation to continue to move forward here, especially as some of those stickier areas in services have been at the top of the mind for the Fed too.
Yeah, certainly. We're expecting to see some softening in this report, and we did get just that. This reading of 3.5% for core PCE. It's the lowest that we've seen in just about 2.5 years, going back to April of 2021. And putting this in perspective with Fed policy as well, the Fed funds rate now at 1.8% above a core PCE, making this the most restrictive policy that we have seen since 2007. So, of course, where we are in this race, or where the Fed is in their attempts to ease inflation, of course, is the big discussion point amongst policymakers, also amongst investors as well. And we have had differing views just this week on the fight with inflation and where things stand. And even most recently, just in the last 24 hours, you have Bostic coming out saying that he is increasingly convinced that we are on this downward trend here for inflation. And then taking the almost essentially the opposite side, we have Barkin coming out saying that he doesn't essentially see that being the case, or it's too early to call just yet. And I mentioned those two comments because both of those Bostic and Barkin are both voting members for the Fed next year in terms of policy and what we could see. So, of course, this then begs the question that the street was getting very optimistic. I think they would put it that way, just in terms of what the timing would look like on a cut. We had Ackman earlier this week saying that, hey, we could see the Fed cut in the first quarter. But we got to remember that core PCE obviously still 1.5% above where the Fed's target is.
Well, kicking in the screen door over at the Ackman residence, thinking that there's going to be a cut, is Mary Daly this morning. Mary Daly saying, I'm not thinking about rate cuts at all right now. We're going to get a ton of Fed speak over the course of today to really kind of round out the week. But this coming off of that fresh economic data that we were just discussing here. But I think that most notably is where some of the Fed members, voting and even non-voting, and as we get some of that Fed speak that continues to come forward, pay close attention to those voting members and what they're saying, especially going into a time where you've got some of the most bullish calls on Wall Street that are hinging on some type of cut coming forth either in the first half of 2024, and some of the others that are just looking for one to come forward at any point in 2024. But a pause doesn't necessarily mean a cut at this point.
Yeah, certainly. And as we can see from the commentary that we're getting out this morning, and also what we've seen over the last several weeks, policymakers still remain split just in terms of how much progress they have made for their fight to tame inflation.